This is Iberian Property Insights, an initiative aimed for those who want to be updated on the Iberian real estate sector. My name is Alexander Lima. We are back with another special guest. This time I have the pleasure of welcoming Emilio Velasco, Real Estate Executive Director for Iberia at Tikehau Capital. And Emilio, Tikehau is a French asset manager with 4 business lines: private equity, private debt, liquid assets, and real estate. I was wondering, can you tell us a little bit more of how the firm landed in Iberia in the real estate business?
Sure. Thank you, Alexander, for the invitation and for allowing me to share a bit more color about Tikehau Capital and our real estate strategy here in Iberia. So Tikehau Capital opened our office here in Madrid in 2017, led by Carmen Alonso, our head of Iberia and UK. At first, so to say, the main focus here in Iberia, out of the 4 strategies you mentioned, was private debt and then private equity, also due to Carmen's background. However, real estate has always been a very important piece within Tikehau's DNA, representing today more than 13 billion of assets under management within the overall 44 billion that Tikehau nowadays has. Also worth highlighting probably is that the first deal that was completed by our 2 co-founders, Antoine Flammarion and Mathieu Chapin, was a real estate one, namely the acquisition of the Saint-Ouen flea market in Paris. So the idea when the Madrid office was opened was definitely to develop locally all the 4 strategies that are core to Tikehau Capital, of course, including real estate as well. That was the reason why I was hired back in 2019 to set up this strategy here. At Tikehau, we like to say that good deals have no wheels, implying the significant importance of having local teams in place that can be really on top and close to the market, and therefore source and execute the most attractive deals.
Good deals have no deals. I like that expression. Emilio, over the last 5 years, you have invested over 1 billion euros in both Spain and Portugal. How is your current portfolio distribution between the 2 countries? And what is your investment target for the next 2 years?
Our current distribution between Spain and Portugal is approximately 50% each. As you can see, Portugal has been and continues being a very important market for us, where we have found very good partners and really attractive deals. Regarding the future, well, we don't have a set in stone investment target for the Iberian market. As you said, we have managed to invest close to 1 billion capital, including the 3 different types of capital that we invest and manage, namely value add, core plus, and core, within less than 5 years since the strategy and team were set up. We definitely believe this to be a great achievement. But most important is that we think we have managed to set the grounds for this to continue growing exponentially. We have been able to create a full ecosystem, including our own investment and asset management teams, as well as different type of top partners and advisors that will definitely help us to bring Tikehau's real estate strategy here in Iberia, so to say, to the next level.
Emilio, is there any kind of deal that you would like to highlight for those who may not be so familiar with Tikehau Capital? What would you highlight of your transactions?
Well, this is a difficult question, but if we were to pick one deal, probably we would highlight Project SIP, which is a close to 300 million portfolio, including almost 4,000 granular residential units distributed throughout Portugal that we closed about 3 years ago. The strategy for this deal has been, so to say, a dual one. So we split the portfolio into 2 different sub-portfolios, one for granular sale to individuals, including on average less liquid and worse located units, and the other one to be stabilized into a rental portfolio, including, so to say, the more liquid and better located units. Approximately 50% of the units falling on each of the 2 sub-portfolios. I have to highlight that the performance of this deal is being extraordinary. Just to give you some data, I mean, we have sold already more than 1,900 units of the packet for sale, on average 31% above our underwriting estimates. The deal, on an overall basis, is currently targeting an IRR in excess of 25%, which, considering this is residential, that is, so to say, already developed and quite liquid, we believe that the relationship between risk and return here is being extraordinarily positive.
25%, it's quite impressive.
Indeed.
And Emilio, to pick up on the other side, is there any kind of transaction that you may not be able to have completed already to enter maybe a specific city or a specific segment, but that Tikehau is still looking to put their hands in?
Definitely. For some time we had, so to say, a pending to do on the hospitality side. Hospitality has always been an important asset class within the Tikehau real estate strategy. And considering the importance of the hospitality market here in Iberia, it made all sense for us to try to close a hospitality deal here. Fortunately, we believe we should be closing our first one in Portugal by end of the year. This is a very interesting reconversion project of an old palace in one of the most, so to say, sought after areas in Lisbon city center, with the aim to create what, in our view, will be, if not the best, definitely one of the best 5-star hotel in Lisbon. Apart from that, well, probably logistics is also on our to-do list. We got the view that things got quickly overheated in the Iberian logistics market a few years ago, and that's why we decided to focus on other asset classes. However, with recent repricing that we have been observing throughout the last few years, we believe it might be a good momentum to put more focus on this asset class for the near future as well.
Let's get back to what you mentioned before about granular acquisitions. As I well recall, last year, Tikehau announced a strategy together with Almond and Alex to invest in this concept of refurb to rent. Of course, housing within the Madrid 30 area. And have you already completed any acquisitions? How is it to work with 2 other partners? How are you managing the process?
Absolutely. This strategy is, we can say it's going very well. As mentioned before, residential is definitely one of our preferred asset classes, as we continue seeing, so to say, a great imbalance in terms of supply and demand in the whole of Iberia, including both the for sale and the rental markets. And this imbalance, we believe, gets even deeper if we focus on the medium to high quality rental market within the core of big population poles, such as Madrid, where supply is, we can say, is practically non-existent. That's why we decided to launch this strategy together with Almond and Alex, who, in our view, are real experts in terms of sourcing, repositioning, and managing this kind of granular residential product about less than a year ago. In that period of time, we've managed to acquire already about 120 units, quite evenly distributed within Madrid M30, and where we are achieving a very positive average rental yield. Considering this is high quality refurbished product located within the probably most liquid areas within Madrid. In terms of our target for this portfolio, well, our aim is to build up a portfolio of about 400 to 450 units with similar characteristics within the next, say, 2 to 2.5 years.
Well, Emilio, I usually do this background check on all the podcast invitations, and I was checking your LinkedIn, and something I came across was you mentioning the advantages of PropTech in terms of managing granular acquisitions, because something that probably people wonder is how more complex it is to manage these granular housing units than to manage a complete building. Is it very different? Can you work out a good solution to be efficient in that management?
Well, we believe that once the portfolio is, so to say, sourced and acquired, the effective management of the units is not that different from one, so to say, whole asset to a portfolio of granular units. When you have a whole asset, it's not that the boiler breaks up at the same time in all of the units. No? So the effective management is also very, very granular. No? So we don't think it's that different. And also, as you said, technology is allowing for new tools that are definitely very useful to manage this kind of granular portfolio. This was not possible some years ago, but nowadays with these new tools, this is getting easier. And well, we are seeing that in the kind of leakage that we are seeing between the gross revenue and the net income that we are being able to produce for this granular portfolio, which is not that different to what we can see in build-to-rent product.
Okay, so myth deconstructed. And Emilio, about the reconversion that, for example, you're talking about Lisbon, in Portugal, in that palace or the hotel. It's a big topic nowadays, reconversion of buildings. We are seeing from all the asset classes, from offices to residential, from hotels to supermarkets. We track everything down in Iberian property. And you have some very important undergoing projects in Portugal. Where are they located? Which is the original and final use? And what are the main challenges on this process?
Exactly. I mean, the reconversion projects are definitely among our preferred ones, as we believe that this is the type of project where we can really add value, namely by reconverting and repositioning an existing asset that is currently not maximizing its value with, so to say, its current use to something else that makes more sense, considering location, considering market dynamics, etc. Driving, so to say, a clear value add exercise within this whole value add process. It is right, I mean, answering your other questions, that the two major reconversion projects we are now focused on are located in Portugal. The first one is the hotel reconversion that I talked about before in Lisbon. And the second one is a project in Porto, in which we are basically repositioning an old non-performing shopping center, very well located in Porto, namely, so to say, enjoying a quite central and urban location into a mixed-use asset, including office and retail uses that we believe will, so to say, perfectly target the current demand for spaces in this micro location. And answering your last question regarding biggest challenges, well, probably planning permit timing is one of the most critical ones, I would say, considering this is probably the one of the main project assumptions that we typically don't manage ourselves, so to say. It doesn't depend so much on us, but on third parties on which we don't have such a perfect visibility.
Perfect. Emilio, are you up for a crystal ball of a month's question? In your opinion, what is the big trend that will mark this next upcoming months or the next year?
Sure. So in our view, I mean, we have a very good market opportunity in front of us. During the last few months, we have been seeing some price adjustments in most of the real estate asset classes, which is something that we haven't seen in many years. So for active investors like ourselves who are willing to grow and expand our portfolios, we believe this is already a great entry opportunity. And this opportunity, in our view, will be further complemented by the current financing scenario. I mean, in the current environment, we get to know more and more real estate owners with difficult financing situations, mainly due to three different facts. First, very often, I mean, debt maturities are coming to an end in a way different environment to what we had 3 years ago. Second, I mean, valuations are getting lower, implying higher LTV ratios. And third, well, interest rates hedging instruments used 3 years ago were also definitely not the right ones for the current environment with such different interest rate levels. This, in our view, is turning quite a few of these real estate asset holders into forced sellers, which obviously represents another major opportunity for us, which we believe will be ongoing, so to say, for the next 2 years approximately. And apart from that, well, we believe that the other major trend that I would also probably like to highlight is the ESG impact within the real estate industry. We believe that nowadays, including, so to say, a significant ESG related budget to complete our real estate projects is already a must and not a nice to have anymore. There are probably, in our view, two reasons for that. First one is regulation, where Europe has put itself at the forefront, establishing significant targets to be complied with in the near future. And second is the market demand that we are seeing for this topic from all the different market participants, from financing banks to tenants, investors, etc. In our view, all these players focusing more and more on the importance of ESG are creating a whole ecosystem in which it is necessary to take part if you want to continue playing the game.
Emilio, I would like to take the chance, since Tikehau covers both equity and debt, and you already mentioned some financing conditions. How do you see the current financing scenario? Is there enough capital available to boost the capital markets activity still in 2024?
Yeah, we believe there is also currently a good opportunity in the alternative financing market. As said before, the financing scenario has changed very rapidly, and traditional lenders, such as banks, are being more selective in terms of leverage and follow de-risking strategies due to stricter capital and liquidity requirements, as well as the new rate environment. As a result, lenders have reduced, so to say, their loan-to-value and loan-to-cost ratios across the different asset types. And this is opening opportunities, for instance, for mezzanine transaction with better risk-reward for alternative lenders, such as us, namely reflected in our view three different elements. First, higher base rates, also widening credit spreads, and increased equity buffer and additional principal protection for lenders. Moreover, and also as mentioned before, we believe that we are and will be facing even more complex refinancing situations. In fact, we expect a quite big refinancing wall ahead of us, with about 114 billion of debt funding gap to come through the next 3 years just in Europe. So we believe this to be a great opportunity.
Yes, so I imagine if there is capital for others, there will be capital for Tikehau as well. So how would you position Tikehau for this next couple of months in terms of activity? Are you on the buying spectrum or are you on the selling side? What is your plan?
Absolutely. We continue being in clear acquisition mode. As said, we believe there is a clear market momentum to acquire good assets at good entry prices that we should definitely benefit from. Our view is that, good managers with deep pockets to invest and willing to seize on this opportunity should be the clear winners throughout the near future. Most important will be for managers to be able to select assets or opportunities with attractive entry prices, work out a business plan that perfectly fits the respective asset, and take on board the importance of the ESG angle as we anticipated before.
Well, we look for the Iberian property to cover your acquisitions and write about them. Emilio, is there anything else that we left out that would be important to place Tikehau Capital in our listeners' mind?
Not really. We believe we have touched base on every of the major points, but as said before, we just want to re-emphasize that we are facing a very good momentum, a clear opportunity, clear market opportunity in front of us that we believe we should definitely seize on it and take the most of it.
A perfect, optimistic closing. Thank you, Emilio, for participating on what was the Iberian Property Insights powered by Grupo Iberia.
Thank you.